Candle range theory trader with 8 hour chart liquidity sweeps. Let's go. Remember that as long as the sweep holds, you can keep the bias when your entry signal appears on the lower time frame. Lose small until you can win big. Just assume most of your trades will be losses. Okay, that'll help you handle that psychologically at least. All right, so let's look at the first one. So remember, when we trade the 8 hour chart, you only have three 8 hour charts that print every single day. You have the 1700, which is 5 o'clock p.m. Eastern Standard Time, 1 a.m. Eastern Standard, and 9 a.m. Eastern Standard. That's it. So you're going to have three chances per day to catch a candle three or a candle four. So there you go. So this first one here is going to be euro dollar long. So I will show the candle two and then the candle four, the candle that actually pays out. So the candle two is always going to be the candle that makes this sweep, where the blue line appears, where the market level indicators highlights here. Okay. So you would hope that candle three would be next, but as we can see here, consolidation, right? 8 hours it's been consolidating. The move didn't come until 8 hours later. So here, boom, that was the expansion to the upside. So what we're gonna do is look at this candle right here, right? So you still could have entered over here, but you just, you would have had to hold for the actual move. So this is candle four. So this 5 minute chart is this candle right here, right? And this was what 17? No, 1 a.m. All right. So this was the 1 a.m. candle. So now let's go back. So our entry signal, you could have taken one at 2:40 a.m. off of a sweep. Like I think that's down here somewhere in the fair value gap. And another one at around 5:50, around the middle of the range, with a sweep and also more fair value gaps. Either way, that's my entry signal. If I see a sweep and a fair value gap in line with my bias, I'll get in. So that was it. Paid handsomely. What you can do as well with some of these is leave the always set a take profit is what I recommend. But leave the take profit. They leave the always set a stop loss, but you can leave the take profit open sometimes depending on. So I leave that up to your discretion. So next is a pound dollar short. So the candle two came at 1700. Candle three was at 1 a.m. and then the candle four at 9 a.m. This is the perfect CRT where they're just all in a row. So candle two, three, and four. This is the dream right here. But will it always work out like this? No, unfortunately not. So we're going to take a look at candle three on the 5 minute chart right here. So let's take a look at that one. So let's see. This was the open price right here. So you could have got in on the sweep and fair value gaps right here. Would have been a good entry. You had a nice little range there, but the main thing is that the sweep holds and the fair value gap holds. So as long as that happens, you're good. And you had another entry signal around some equal highs and fair value gaps at 3:30. Pardon me. So let's keep going. Candle four. Your best entry shot would have been at 9 a.m. Just as soon as the candle opened right here at 9 a.m., there was a sweep here, and then you could have just got in. And then 12:20 gave another entry signal on a sweep near a fair value gap. I think that was that one. Yeah, that was that one right here. So I didn't pick the entries, but that was I should have, but I did not. What you can do as well when it comes to fair value gaps is take a trade when the price starts to reject it. Don't trade while it's inside of it because the gap could just as easily be taken out. Price could keep going up. So when you see the gap start to reject, when you get like a red close outside of it when you're short, make that your entry. Don't enter while the price is still in the gap because you don't know what it's going to do. Next one, we got CAD yen short. We had a 1 a.m. candle two and then a 9 a.m. candle three. So this right here was candle two. I'm sorry, this right here was candle two. And candle three was this one right here with this long wick. So let's remember that it retraced. So take what you can get because don't expect candle three to just close solid red every time. That's not going to happen. So here's candle three. Here was the open price right here at 9. So price tanked. So you could have got in immediately with these equal highs being formed and this fair value gap. Remember I said when price trades away from the fair value gap, get in there. So that could have been your entry right here where my mouse is and then straight drop, right? Fell 50 pips and then started retracing. You don't want to be in while price is retracing. Okay, take what you can get. If you start to see some fair value gaps and equal lows against you, might be time to get out. Okay, take your profit. Next one was pound dollar long. We had a $1,700 candle. I'm sorry, not $1,700. 1,700 hour candle two, and then a 1 a.m. candle three. So let's take a look at that. So here's our candle two right here. This was at 5 p.m. Eastern. Candle three started at 1 and just broke out of the range. Paid handsomely. So let's take a look. And of course, like I said, candle two gave us the sweep. So let's see. This gave three entry signals here with a sweep and a fair value gap here. So you could have got in as early as 7:45 p.m. Entry 2 was 10 p.m. and entry 3 was around 12 midnight. So all of those would have been just fine because the daily open is right here. So just an immediate move to the upside, it gave us that. So this is a perfect candle 3 where it spikes up, creates gaps, sweeps, equal lows, all of that. So that was perfect. Next, we have Euro Yen short. So we had a 9 a.m. candle 2 and a 1700 candle 3. This one was a little tricky because while this one did give the candle 2, candle 3 didn't pay out all that much. Candle 4 came all the way back up and then went down, right? So this candle was solid green and then it turned inside out. Okay. So we're only going to look at candle 4 in this case. So here was candle 4. Candle 4, I mean, it's just engineered. Okay. Candle 4 came back, swept the liquidity. Okay. Blue line appears, got a fair value gap, and then price trades away. So remember I said when you get a fair value gap and price rejects it, yeah, it could have been an entry right here or even down here after these sweeps and fair value gaps and price trades away. And this is what you're expecting: straight candle drop, straight price action to the downside in line with your bias. Okay. So lessons from a loser, because I do like to include losers to let you know that this does not always work. So you had a candle 2 right here that created a low. It swept this liquidity that was back here, closed inside of it. So this looks good to me. This was good for a long bias. But what happened? When the next candle opened, you're expecting candle 3, you got straight drop. And this is the 8-hour chart down here where you see here, this is our candle 2. But instead of going to the upside, it did the exact opposite. It's going to happen to you. So that's why I say keep the losses small. Don't keep trying to say, okay, well, this is low. Okay, well, then this is low. Okay, well, then this is low. Don't do that. Okay, don't do that. I'd say give it maybe two or so tries, maybe one at the most. Or if the price action just doesn't appear, I don't know if there were any sweeps or green fair buy gaps here. I think there might have been a tiny one right in here, but then the price just came right back. So just be careful because this will you don't trade against candles like these. Okay, just if the chart is showing you it wants to go down, don't fight it. You're gonna lose every time. All right. So in conclusion, trading the 8-hour chart can give you more opportunities, but it also gives you the more chances to be wrong. So risk management is going to be number one. Keep your bias as long as the liquidity sweep holds on the higher time frame, the 8-hour time frame. On the lower time frame, keep your bias unless your entry criteria gets taken out. What do I mean by that? Let's say you enter on a fair value gap and a sweep, and then the price comes back and the sweep disappears before hitting your stop loss. Just get out. Use that as a signal that you're wrong, and you can always get in. So I'll give you a real example of this just because I'm a big believer in risk management. So if we go to a live chart, there was a trade I think I lost today. Let's see here. Was it Euro? It was. I think it was Euro. I think it was Euro New Zealand. I think it was on the daily. No, it was Euro Aussie. Yeah, that was it. All right. So here's how you know how to get out. So I'm going to drop down to the 5-minute chart. But first off, let's remember the bias, right? Okay, fair value, not fair value gap, but sweep to the downside here. This sweep gives me my long bias for this candle, respectively. Okay, so when I go back to the daily open, it was giving me what I wanted to see initially, which I think was like right in here somewhere. I think London. I'm trying to find a fair value gap. Oh, I don't have it highlighted. Sorry, hold on. I don't see any sweeps, but we did get like, let's just say, for instance, I'm believing this gap. See how price goes up. So let's just say hypothetically, you take a long here. All right, so there you go, right? So you're banking on the fact that this gap is going to hold. Now, if I let it play a little bit, though, okay, gap is still holding, gap is still holding, gap is still holding, gap is still holding. This isn't the real take profit, by the way, either. I think it was something like that or so. Or I might not have had take profit at all. I know you guys are saying, hey, it's in profit. Why didn't you take profit? I'm just, like I said. But anyway, all right, so see how price came back down? It gave another sweep, and the gap is still holding. So this right here I would have also taken as an entry signal. but the exit signal was right there. See how the gap, the fair value gap disappeared and the sweep liquidity disappeared? So before the stop loss even gets hit, you go ahead and just get out for a smaller loss. So that's it. That's your signal. So whatever gets you in, if it breaks down, that'll get you out. So hopefully that helps. Thank you for your watching. Thanks for your time and attention. Have a great rest of your day. Take care.